What if your startup business could become a part of your legacy or its foundation? This lovely Friday afternoon, I have the pleasure to introduce you to two of the executives to Arcadia Capital. One is Rocky Phagura. He is their Chief Technology Officer and Senior Software Developer. He has over 20 years of software and hardware development experience at such companies as Intel as well as Facebook. And also joining us is Kelly Lyons, their Chief Operating Officer, as well as Senior Trader and Senior Software Developer. So welcome, gentlemen.
Thank you. Thanks for having us.
Yeah. So we're going to have a fun, serious conversation about analytics and our banter, as well as the subject of legacy. So where would you like to start regarding Arcadia Capital? Would you like to start with the inspiration or a problem that you saw in the marketplace?
Well, I've always been interested in trading ever since college. And so in the 90s, where the tech, early 2000s, where the tech bubble burst, all these technology companies were coming out, and I was watching them on CNBC. And I'm like, oh, I've got to start trading. I don't know I don't know how to do it, but I'm going to figure it out. And so that's where the love and the passion kind of started back then. And I actually took out a student loan, which I invested in the stock market at the time, because that's how I went.
This is not financial advice. I just like to do a disclaimer.
By far. And there was a company called Qualcomm at the time. And their stock was just flying high. And I doubled my money within a couple of weeks. I sold it, paid back the loan, and just kind of pocketed the rest. That's how I got started. That's probably the worst way to get started, because you think you're always going to make money like that. It never ended up being that way, but that's how I got started.
My story is a little bit darker. Me and my younger brother is Matthew Lyons is the head of rates trading over at JP Morgan. And I think both of us got the same idea. We were being passed back and forth between our parents for child support checks. And anyway, both of us were like, oh, you can trade anything. So we both took it to heart, I think. That this was a good business to be in.
And Kelly, you're from the Boston area, is that correct?
No, we were born in Portland, Oregon. My dad's family is from Boston.
Got it.
That was that connection.
Okay, so I want to start with the basics for a moment. For any of the new investors that could be listening, as well as any advanced investors, maybe they're over in Switzerland or some part of the world, what would you say is the difference between digital assets and cryptocurrency?
Rock, you want to handle that first?
Sure. So cryptocurrency is a speculative asset, right? It's not really a currency. Sure, it acts in that type of fashion. But anytime a currency fluctuates in value that drastically, I don't believe it's a currency. And I don't believe it's an asset either, because, well, if you like assets that fluctuate so much, right? This is more speculative than anything. And I think it's just something, a sign of the times, probably. And I don't know where it's going to go long term. But the way we approach it from Arcadia's perspective is that this is just another product, another instrument that we can trade, and it's got volatility. We don't care where it's going to be 10 years from now. We don't care where it was yesterday or the day before. We're going to trade it today. We're going to go long or we're going to go short. So that's kind of how we've been treating it.
Yeah, it's funny. I was just Googling. I was trying to find it. There was an economic paper written in, I think it was in the 20s, that won a gentleman a Nobel Prize, and it was all about transaction costs. That was his whole thesis. I think it was cited later by somebody who did important work, and that was how this guy ended up with the Nobel Prize in economics. But until cryptocurrency convinces me that it can solve that fundamental inefficiency about moving money, I'm going to have trouble seeing the value. Yeah. So, I think Visa and MasterCard were very resounding in their they saw what tech had wrought. They saw, Ethereum and Bitcoin, and they saw the transaction costs associated with it, and frankly laughed and raised their own prices. It's like this, if this is the best you guys can do, then our business is in no jeopardy, is what they said. And I agree with them. It's like,
Okay. Yeah. So I know that your technology is proprietary, but what can you tell me about Arcadia Capital that makes it different in the marketplace, given other options right now regarding how people, specifically investors, can get a return on their investment?
Yeah, very good question. So first and foremost, our philosophy is wealth preservation, right? So we want to preserve your wealth. So if you give us 100,000, we want to make sure it never goes below that 100,000, right? So we have a philosophy where we take that majority, all of that money, and invest it in something that's very safe, and it has a monthly or quarterly dividend coming in, and these are stable companies that we invest in. Then we take some of that, a portion of that money that you're making each month and quarter, and we put it into some of our algorithmic trading portion of the business. And that's where we generate higher returns. Now, imagine, for example, let's assume a worst case scenario, we lost some of that money in the algorithmic trading, right? Well, you didn't lose your principal, you only lost a portion of your profits. And so that's how we really boost our returns. And I think that's something unique that we offer that other companies may not.
yeah, and just to elaborate more, the two words that I think I would want people to take away are orthogonal and what was the other one? I can't even remember. Let's just start with the first one. The other one will come to me, I'm sure. Oh, rigor was the other one. When we talk about orthogonal, what we mean is that we're going to have a huge variety of algorithms, hundreds, deployed across thousands of products, and each one of their profit and return profile is going to be a little bit different than the other ones. And so the amount of diversification that you're going to have through algorithms is far beyond long and short, time frame, all manner of diversification. And that is really, I think a core part of our philosophy. And the other word, rigor, is we are extremely data driven. Forward testing, back testing. I think the way that we make money, our philosophy of preserving wealth first, lets us have the luxury of sitting back and spending all those hours making sure that something works. There are plenty of hedge funds out there that are, strictly algorithmically driven. If your strategies fall apart, if your vol assumptions fall apart, whatever assumptions have gone into your model, if that is your only strategy, come Monday, you might have spent all weekend working that off. And if that wasn't long enough, you're still turning your strategies on and they're still getting smoked. And the ability to sit back and be like, no, our assumptions are no longer valid, we need to revisit them, is I think, again, one of the things that sets us apart.
Yes.
Absolutely. And the other part I'd like to point out is we do question basic principles. Well, why is this algorithm working? Just because we ran it and back tested it and the data looks good right off the bat, is it just noise? Are we trading the noise and the noise is just looking good, right? And so we do a lot of that type of fundamental thinking as well. Why is this working the way it is?
And sometimes we don't know.
And sometimes we don't know. And so we question it more and we keep digging and digging.
Yeah. But it's a process. So that's that, I think more or less that's
the gist of it. Yeah. Very cool. Very cool. So would you say, and this was a question I also asked your associate, would you say that the existing marketplace is a mere reflection of human emotions?
Rock, you want to go first? I'm happy to take this.
Oh,
you first. Yeah. No, it is certainly not. It is certainly not. It is it's a much better mechanism than pure human emotion. It's a measure of forward expectation that seems like human emotion, because whether the market is like pricing things for a month out or a year out is anybody's guess. And obviously, its ability to get things completely wrong is another part of market behavior. So I think you just have to accept those things in tandem. But to call it, it's a cop out. I think it was this idea of raw human emotion. I think comes from Keynes' animal spirits, and I respectfully disagree with all humility with Mr. Keynes.
Yeah, and to add to that, right, these markets are very efficient, and there's a lot of variables. The human emotion part is just one aspect of it. And because of the variety of investors out there, some are data-driven, some are emotion-driven. It depends on the investor and their trading level. Some look to the past, somebody like Ray Dalio, to study the economic downturns and say, okay, how does this relate to what's happening today or tomorrow? And then there's people that are just forward-looking only, right, based on today's data. So there's a whole huge variety of investors out there. And I think all of those shape into the way the market moves, or the markets move.
Yeah.
Very nice, very nice. So what do you think is going on in the bigger picture these days? Because some of us think that like JP Morgan Chase has got the high frequency trading machines and it's rigged, and other people think otherwise. So what say you?
I come from the HFT world, and I think there's a lip service that everybody likes to pay about, the HFT people are doing this, or this giant firm is doing that. And my general thought is that what they're doing is more complicated than you're giving them credit for. And also, JP Morgan has trades on both sides. They have some division over here that's long, and then some division over here that's short. And you're wasting your time if you're trying to extrapolate what other players are doing in the market, or you're just grossly oversimplifying the entire picture. So if you can call lightning strikes gods, or you can try to look for more serious answers.
Your thoughts, Rocky?
Well, my serious answer is that the markets are too big to be manipulated. Sure, they can have some sort of coordinated movements, but over in the long term, the markets are way too big. I'll give you an example. Like some of these stocks, meme stocks, have been run up, right? Tesla was probably one of the first ones that were run up by Elon Musk, just because of the way he likes to be vocal, right, about everything. And he had that stock run up. And the reason the stock ran up was because in 2017, he came to an agreement with the board saying that, hey, I could get the price 500 and compensate me with X, Y, and Z. And so in 2017, around that time, the price of Tesla stock was around 200, 225. Well, sure enough, he got it up to 500 and beyond, because there was so much momentum, right? And so I think there's something happening in the short term, but over the long term, the markets are very efficient, and any type of rigging and everything else will come out, and you'll be able to see it.
Yeah, and the HFT guys get smoked on occasion. Everybody at every desk has gotten smoked at some point. People look at these firms and say, oh, they never lose money. Well, maybe in the aggregate, yeah, maybe all these strategies put together eventually cancel each other out, and they almost never lose money. But you break it down into any given proportion, any given desk, any given trader, on any given day, somebody's getting smoked. So it's not like they're manipulating the market to their perfect fit. It's much more nuanced than that.
Okay.
Yes, absolutely. And by the way, HFT, what Kelly's referring to, is high frequency trading. So they are, trading at those sub-second levels.
Mm-hmm.
But yes, every investor in their lifetime gets burned, and the markets will make you humble very, very quickly. Therefore, you should have that type of approach to the markets. You will get burned.
Yeah. To make it more personal, right? It's like on any given day, we have an algorithm that is getting smoked, and we have 3 that are treading water, and we have 2 or 4 that are, making money. It's just sort of, it's not, on the whole, we may make money every day of the week, but it's not because every strategy performs at 100%. It's that the cumulative whole of it does very well.
Okay. So you would agree then that the marketplace is the judge?
Oh yeah. No.
Absolutely.
That's why we're here. It's not because we're pretty. It's we don't win beauty contests. We came into this field because
you're just not just another pretty face. But go ahead.
No, it's because there's no politics. There's no arbiter of whether we're doing a good job or not, other than the market. And I can wake up and say nice things to the market all day.
Yeah.
I have to name drop the Warriors because we're in California, and at the end of the day, all the talking is just that you either win or lose. So yes, it is very much the arbiter. Also let's talk Keynes again, right? Like,
okay.
Famously brilliant economist, famously bad at speculating. So there you have it.
Any other thoughts, Rocky? All right, and I'll move on to the next question.
I'm good.
Okay. So one of the things that I picked up on in previous podcasts is your belief about the moat. In other words, this idea that there can be protection, or the moat around one's castle is an illusion.
Yes, it is very much an illusion. Especially right now, when you're seeing assets melt down, much like 2008, where you had assets that people felt were safe, your house, and all of a sudden you're watching the value of your house plummet, right? It's like a lot of these things are illusory, I would say.
Yeah, assume no knowledge, right? So,
okay. From Socrates. Okay.
Right. Even the value of your house, like it may have appraised for X last month.
Yeah.
And it's a slow moving boat, to be sure. But
yeah, and another example is, right now we rely on our federal government to bail us out when bad things happen. Right?
And the banks.
right.
But there will be a day where they can bail us out, because we will be so heavily in debt and nobody else will loan to us. We can print all the money we want, but it's going to be worthless. The more money you print, the lower in value it's going to go. Right?
Yeah. Sorry, I didn't mean to. I apologize.
I believe that the debt crisis, is the way I look at it, is coming, and we haven't seen it yet. There's always going to be a recession. Something's bad's going to happen in the market. It's always going to be in a different form, right? A tech bubble, a recession in 2008, the housing crisis, pandemic. Next one it's going to be something. We just don't know what it is, but it's going to cause panic in the markets.
Yeah, and to that point, I think the inflation that we're seeing in some respects is bailing the entire world out of our lack of fiscal discipline. I mean, every consumer, every government, every business that is deep in debt is like, the best thing you can be in inflationary times is a debtor. We are slowly erasing the value of that debt every month as inflation goes by. Not necessarily is it good for people, it's the complete opposite for people with wealth, right? Like
Yeah.
You're watching your wealth, the value of your wealth get destroyed. It's just it happens. So
yeah. Well, I think knowledge is important. I believe in the moat around the castle, but that's just because it has to do with preparation. I think to at least do the preparation matters. Some people just don't out there, or they just hand over their money, let's say, to one strategy, and they don't necessarily open up their mind to learn about multiple different opportunities.
Oh yeah, yes. I think I agree with you completely. As a concept to as a guiding principle. Yeah.
Well, I'm coming from the coaching perspective of personal development.
No, I think we do very much agree. And also, like the best defenses the best walls and moats are breachable, and to be, again, always question your assumptions and go into things with a fair bit of humility.
Yeah. So one thing I had written down as in preparation to this conversation is that as money is a requirement of a legacy, whether it's the scale of a legacy or to ensure survival, perhaps it's two sides of, of a coin in the plus minus universe. So I wanted to bring up now, what are your thoughts about legacy?
I'll start. I thought about this a little bit. What I'd like to do someday is to be able to start my own charity, right? And the charity, I'd like it to be a charity that generates its own profit for its nonprofit purposes, correct? But there are some areas here in the nation, probably worldwide too, but let's just stick to here in the States. An area where housing is not accessible to everybody, right? We have a group of people, let's just say, in between middle class to lower class, and kind of in between there. They don't have quite enough income to go buy a house and get a loan, yet they are not quite low enough to get any type of government assistance as well, right? Sure, there's FHA loans and et cetera, but they have heavy fees, et cetera. So what I'd like to do is, some of these people are just stuck. They can't get the public housing, but if they try to go get a house, the mortgage is too high, or they're kind of stuck just paying for that little apartment rent. And apartment rents, as you already know, are very high. I like to help some of these underserved people in terms of the charity, just giving them a free loan. They still have to pay back the principal, but there will be no interest on it, right?
Oh,
and they can purchase their home and get into their home and raise their family, raise their kids. It's very important to raise kids, I think, in a good neighborhood, a good area, right?
A good environment.
Good environment.
The Head
right?
Start is the Head Start, yes.
Yeah. And emotionally, everything else, building their confidence, their self-esteem, it goes a long ways later in life. And so that is one area that I see right off the bat that I would go serve.
So a little backstory. I grew up in Portland. Rocky and I met playing basketball at the YMCA. When I was in high school, Nike came and they redid every basketball court in Portland. They put really nice asphalt down and a giant swoosh right in the middle of every basketball court in Portland. And where Rocky and I met has Draymond Green flexing in the middle of it. Draymond gave some money to the YMCA to make that basketball court really nice. And it'd be nice to do something like that. They don't need to put my name on it. I can flex. I don't know. But yeah, I think little things like that, just to make the world a better place, are important.
Angeline, to add to that story, so the way we met, I would go there about 1 p.m. every afternoon to go play. And Kelly would show up about 1 p.m. And 1 p.m. is important for the West Coast because that's when the stock markets close on the East Coast, right?
Oh, okay.
Why is this guy showing up at 1 p.m. every day? And then I introduced myself, and then we started talking, and then
we started playing.
Yeah. But then before you know it, we found out, okay, we're both in finance, stock market. We both like this sort of stuff. And that's how our friendship came to be.
Mm-hmm.
So this is recent. This wasn't like when you guys were growing up.
No. This was as adults, as the old heads at the gym is what they call, Yeah.
I think that's a wonderful story, and I'm going to get to your relative in a moment. Kelly, you had shared regarding the Boston connection, but before I do, I think, Rocky, I just want to acknowledge that your vision for what's possible, because I've often said that unless somebody has a head start in life, it's very hard. I mean, somebody can prevail and make it, but it just is that much harder. I kind of describe it like, this might not be the best metaphor, but it's almost like somebody's at the start of a race and they're in a wheelchair and the wheels are deflated and they have a learning disability, and then the world gets upset with them that they're not winning the race, but nobody's looking at the fact of how they're starting out.
Yeah. This
absolutely
very important.
That momentum, right? That momentum, if we can give these kids, That's all they need. They can take off from there.
Yeah. Oh, sorry. Go ahead,
I
Angela.
was just going to say with imagination and creativity. Go ahead, Kelly.
Yeah. No. The equality of outcome is not important, but equality of opportunity is important. My friend Mike says that to me repeatedly, and I agree with him completely on that. So,
Very cool. So going back to legacy for a moment, what would you say are some of your top values?
Go ahead, Kelly.
no, that's a tough one. Boy, I came very ready to talk about analytics.
We'll go back in a moment and we'll talk about if human emotions are standardized.
These are more important questions about life, unfortunately, than our squared values.
I think empathy and compassion is something that's been highlighted in some of my conversations.
Mm-hmm. Yeah, I read a lot that helping others helps yourself. I don't know if you noticed, but when I logged in, my thing said the coder school. I teach kids software engineering also. It is very rewarding. It takes so much patience to work with kids. I'm not a parent, full disclosure, but you do learn an incredible amount from helping other people. It is like that is the best way to learn for yourself, I think.
Okay. So I'm going to go back for a moment to human emotions. Do you think that we need centralized platforms? And the example I gave is what's separating me from the oncoming traffic? If, let's say, the state of California puts in concrete barriers in between two lanes.
Mm-hmm.
I believe so. As human beings, we need this type of help.
Okay, this framework guidance.
Yes,
yeah.
absolutely.
Okay.
Because in general, I think human beings lack common sense. I think it should be at a very elementary level and then high school and reminded of type of thing. And secondly, we're easily distracted, especially in this new TikTok short video type world. We have the tendencies to look somewhere else. If my phone gets a message, I'm going to look away from this meeting and look over on my message and see, oh, okay, I'll deal with it later, even though I know I should be dealing with it later, right?
Actually, that's a really good TikTok video. I just sent it to you.
Well, sometimes when we're walking around or going into oncoming traffic, we may not be thinking it. We've all done this before. How many times did that stoplight, was it green, red? How did I get through it, right? So we need to have regulations like that. That's why I'm a big fan of autonomous driving. I think we absolutely need it, simply because there'll be less accidents. Humans are easily distracted and cannot just focus on one thing at a time.
Yeah, you bring up a good point. The once machines figure out driving, the number of not that that's around the corner necessarily, but there will be a lot less accidents when they get it down. And the accidents that there are will be fender benders, right? Like they'll be okay.
Minor.
Stop in time. Yeah, exactly.
Yeah. What is it like? And I know we've got less than 5 minutes. What would you say it's like in the day-to-day of being at Arcadia Capital in the day-to-day operations?
I'll start. So my primary focus lately has been on futures trading. And those markets open up at 3 p.m. on Sundays, Pacific time. And they shut down essentially on Fridays at 2 p.m. So I am awake a lot of the times. At night, I'll wake up in the middle of the night and go check on algorithms, see what's happening. Something catastrophic didn't happen. Computer didn't crash. Software didn't have some sort of a bug. We didn't lose money, that type of thing. So that's the day-to-day thing. The other part of it is Kelly and I talking on the phone probably 100 times a day for little conversations, creative work, etc. Those are probably majority of our days. And then we have the strategic stuff, the admin, the HR type work that we need to do, the less fun stuff, right? And so that's kind of like the day and day stuff happening on my side.
Yeah, it's the opportunity to pursue, guided intellectual pursuits. The being able to work on machine learning projects with trying to predict macroeconomic outcomes, and very challenging, interesting work is really makes up for the coffee being cold all the time.
Well, it's interesting. I think with global politics bringing more crises and uncertainty, whether that's Ukraine to inflation and on, I know sometimes, many times, fear can drive the marketplace, and that uncertainty you can either ride it up or ride it down. Yeah.
Yeah, it is right. More and more. I mean, the scope of the United States in terms of its its percentage of global GDP is going to continue to go down, and we are going to continually, continually more and more global world. Even though we are taking a retrenchment from that philosophy lately, regardless, I do think more and more an eye toward what's happening everywhere else in the world is necessary for success.
Any final thoughts about legacy or data?
Well, I really enjoyed it.
Unless you need a nap, we can talk about data.
Well, I was just going to share that before we started recording in our preamble, Kelly, you had shared that your relative was one of Boston's greatest.
Yeah, Tom White. He had made it a goal to die broke, which it's an admirable thing. I don't expect that of everybody. I don't expect everyone to want their legacy to be that.
So he was one of Boston's greatest philanthropists. What did he give to?
Oh, I don't know. Yeah, Harvard for one.
Okay.
I'm not sure. He gave away $82 million, I think. I'd have to.
If only I could have.
Over his lifetime, yeah. It was
okay.
His goal was to die. Like, he made a lot of money, and his goal was to give every last dime of it away. And I think that. He worked with Paul Farmer, Haiti. I'm not sure. I forget what that organization is called. But yeah, he gave a lot of money to Haiti as well.
He should have given you one of those hardcover coffee table books from Legacy Planning.
Yeah, no, that would have been good. We weren't part of his legacy. His legacy was bigger than us, unfortunately. We got all Paul Farmer's books. That was a funny part of Christmas. Was every Christmas it'd be signed. Cool, thanks. They're good books.
Rocky, any final thoughts?
Thank you for having us on the show. This has been wonderful. We're happy to do it again in a few months if you'd like to be on.
Yeah. If you want to, update. If you wanted like a current events, like what's going on here. The world is a rapidly changing place. And
absolutely, yeah. And
talk to you. So.
Wonderful. In closing, I'm Angelina Carlton, the hostess of the Design Your Legacy podcast, as well as the founder of Legacy Planning, a boutique coaching and advisory firm based out of Beverly Hills, California, USA, but international in those I coach. I hope to dive deep into subjects that can help a person define, develop, and execute their legacy, and continue to scour the landscape for those who can be great resources to every dimension of your legacy. For many listeners, there can never be enough education and preparation for your legacy. So whether you find yourself in new wealth or generational wealth, may the content of this channel be an anchor in any storms ahead. We do our best to provide original content for your intellectual and emotional curiosity. Thank you for joining us today. And remember, I coach people on the subject of personal legacies. And we appreciate you joining. If you're on YouTube, please like and subscribe. Or if you're on Apple Podcasts, please rate and review. Thank you so much for joining us today.